Most business owners think that the Paydex score is the most important business credit score to build, but what if I told you that there is little known and even hidden business credit score that's even more important than the Paydex score? Well, there is. It's called the SBSS, or the Small Business Scoring System credit score. Now, this credit score is used by the SBA and now even more and more lenders to evaluate your business to get you access to funding. So on this video, we're going to be breaking down exactly how you build this business credit score fast so that you can get access to business funding, and also everything that goes into the score, how to generate one, and where you at right now, and how to tell exactly what your score is now so you can start improving it. So this is going to be a full breakdown, the only video that you need on the SBSS. So without any further ado, let's get it. What's going on? My name is Colin Brown, and I help business owners get access to capital to either start, grow, or scale their companies. Consider subscribing if this is your first time seeing me, or you welcome back if you are a returning viewer. And consider subscribing because guess what? This may be your last time seeing me, and wouldn't that be sad? Now, let's dive on in. Let's not waste any time because we have a lot to cover here. So what is the SBSS Business Credit Score? It's the Small Business Scoring Service. That's what it stands for. It's used by the SBA, and more lenders are starting to use this now, major lenders. So it's going to be very important moving forward because this is your real FICO score for your business to really evaluate the health, the overall risk that the bank is going to assume by lending to you. So it's very important. And the range is anywhere from 0 to 300. Now, most lenders typically want to see 140 plus, sometimes a 160. And we'll talk about what that actually means here shortly. So stick with me all the way into the end. Now, the SBA in particular, for like the SBA 7A loan, they like to see a 140 plus. And high scores actually can make it to where you're eligible for faster and no doc approvals. So this is very important. Like, for example, I got approved for a Chase business line of credit for $150K, and it was no docs, same day, instant approval. So if you want to have approvals like that for higher limits, you're going to want this score to be as high as possible. Now, why this business credit score is hidden, this isn't clickbait. I wasn't saying that for shock value. You literally cannot view this score at all publicly, at least the exact score. And I'll tell you what that means, because there's a roundabout way to view an estimate of this score, but you can't look at this exact score anywhere publicly. And, you know, I wanted to kind of give a quick history lesson for those of you guys that didn't know. This used to be the same way with the FICO score. Yes, our FICO scores that is so easy to see now within just applying for credit, and they show you your score a lot of times and the reason that they approved or denied you, or also Credit Karma, all these different apps. No. So back between around the time of 1958 to around mid 90s, 1995, you could not view or improve your credit score just by knowing what's on there and everything. You couldn't just see your credit utilization and payment history. This was all internal information, right? So a lot of our either parents or grandparents generation, like they could not see this information. So when they apply for credit, the lender, whoever it was, they're applying for like furniture or applying for a car, the lender would just come back approved or denied, or you're at this rate or this rate, and you didn't have a way to actually check. So that reminds me of how it is with this SBSS score, since you can't check it at all. Just for you guys that didn't know that. But why am I saying also the SBSS is more important than the Paydex score? This also wasn't clickbait or anything like that. So the Paydex only affects essentially, or it's only tied to your DNB profile, but the SBA doesn't base approval solely on your DNB profile or your Paydex score. A matter of fact, you'll see here shortly, your Paydex score is a part of your SBSS score, right? So the SBSS is like that gatekeeper score for SBA loans. If you don't have the adequate score for your SBSS, you can't get approved. And again, the SBA, or the Small Business Administration, they give out loans up to $5 million. And Some of you guys may be hearing $5 million. You like, I don't want anything close to that, Colin. I just could use like 100K or something like that. Got it. But still, same thing applies. You got to have the score, or you have to have the score needed in order to use the SBA backed funding. All right. And it determines what you get, without having a ton of paperwork to do, because the higher the score, the less paperwork you'll need. Now, the ultimate goal for funding, and this is a quick side note that I want to break down for you guys. The ultimate goal for funding is to be able to get access to $1 million plus at the bank at a moment's notice. And again, you may be saying, why, Colin? Why don't I need that much? First of all, you don't know what you need depending on where you are. And I'm only talking to those that would say something like, I don't need that much. Some of y'all are like $1 million. That's chump change. So I'm only talking to you guys real quick that, you may hear that and it may sound like a number you don't need access to. Well, look, you don't know what you need yet, because until your business gets there and it grows, you don't know what your business will need in the future. So don't go by how you feel about it now, what your numbers say right now. Once you scale and grow a company, you'll see that the need for capital will always be there. And speaking of, that's the number one reason that any business succeeds or fails, is because of capital. So why would you not want the most access to capital? And you may be saying, well, I'm not trying to borrow that. I know capital, but that's more referring to actual cash flow generated from revenue from the company. I get it. But in order to do that, whatever it is, you're going to need money to make money. So whoever has the most capital wins every time, okay? Because now you have more capital to either acquire new customers, new clients, to acquire information that's needed to create more revenue for your business, whether you're in real estate investing, whether you're in the service side of the business like I am, whether it's products, it doesn't matter. You all need capital. So the goal is to have the most capital, right? Therefore, you want to be put in a position where you can get access to the most capital. So that's why I say this score is even more important than the Paydex score, because that's all I really hear. Paydex score, vendor account, and 80 Paydex score and all that. Really, it's about the SBSS. Now, back to the original point, the big boy funding is the SBA. And since they provide the most amount of funding and put you in the best chances to get not only the lowest rate, very low interest rates, less than 10%, sometimes even less than 5%, which is rare, but depending on the situation, like 3 to 5%, right? Not only that, but they have the best terms. They can stretch out a loan 10 years, 20 years, 30 years. You guys know that with the EIDL loan that was given out during COVID, right? If you were in business around that time, or you heard about the PPP loans. Now, I didn't do a PPP loan or anything like that, but I do know the terms and the amounts that they were giving out for them. So connecting all this together, if the SBA is the way to the most money and they have the best terms, and the SBA checks the SBSS score, we know it's vital that your business must have a high SBSS score in order to qualify for your business's needs. So that's why I said that. Now, here's how you view your SBSS score, at least kind of. We've already established that the SBSS score is not available to be viewed publicly. However, it's similar to how Credit Karma shows you a Vantage score, which most lenders do not use Vantage currently. They use a FICO score. The same way that is true, there is a way to actually view an estimate of your SBSS score, and it's through nav.com. It's one of the only ways outside of an SBA approved lender that would allow you to see an SBSS score estimate. And you must be on the prime plan to view it. The standard plan doesn't include it. So if you're on a free or even that plan before prime, you won't be able to see it. I'll put a link down below in the description, so that way you can go ahead and get access to the SBSS score too as well if you don't have it. So the track won't get it done. The bill won't get it done. It has to be the expand. So if you see here, it says FICO SBSS score to track eligibility with 75 plus lenders and the SBA. So you see it's all right there. It's going to be on the website, nav.com, and I'll put a direct link right down there below too as well. Now, what makes up your SBSS score? It's four main categories. It's more than four different factors, but four main categories. Number one, your personal credit. So your personal credit actually makes up most of your SBSS score. At least, well, half of it, I should say. So it's around 50%. We'll talk about exactly what you can do about that, but we're just breaking down the categories and then we'll dive a bit deeper. Number two, your business credit scores. Like I said, DMB or your Paydex scores with at least your Paydex score with DMB and your Experian and Equifax, which is your three major credit bureaus. They're going to make up around 20 to 25% of your SBSS score. Now, number three, your financial performance. So your business revenue, bank balances, cash flow, all of this contributes to around 15% of your total. And I tell people all the time that this information is shared. Don't think that a bank, depending on what you're applying for, don't think that a bank can't tell if you have low cash flow in your business checking accounts and that there isn't a way to actually check your cash flow and your business revenue, even with no doc applications. Like if they wanted to, they could check to see if you had a cash flow. So that's another reason why I tell people all the time, like if you're in the starting phase, business credit cards a lot of times are the best way to go. And there are going to be some lines of credit that you can get, but just know that like for most business loans, if you don't have the business revenue, bank balances, cash flows, so on and so forth, you will not be able to apply and get approved. It's okay. You can liquidate your business credit cards. It's just about setting expectations so you guys understand that. Now, your business structure and history is going to make up around 15% of that score. That's going to be the age of your business. If you've had any public records like a lien, a bankruptcy, a judgment against your business, so on and so forth. Also, your NAICS code and other factors, that's going to make up around 15% of your score. So having a low risk NAICS code is actually even more important than what you think. The age of your business. So any business that's been established or LLC or a corporation that's been established for over 2 years is going to be more favorable than one that is brand new. If you haven't started your LLC yet, you need to yesterday because of this. And a lot of times the banks, like you can't get past this. You can't just say, oh, well, I'm going to get an age corp. Not every single time with every single bank, okay? More importantly, with every bank, you can't get around this. Some banks you can. They don't check for it. They're cool with that. But some banks, they do not. So just start your LLC as soon as possible. And just know, like, if it takes you 2 years to get to the point where you can get to 100K approval just in one approval, 150K, 250K plus, it's okay. Like, grow your business in those 2 years. People just not telling y'all the truth. That's what it comes down to. They just act like you can get everything just starting out with a brand new LLC. No, you can get 50 to 150K, no problem with a LLC that's a day old. But if we're talking like 500K plus, it's not going to happen with like a brand new business. Okay. Now, one thing to note, like I said, the Paydex score is only a percentage of your SBSS. And that's why I said that it's even more important. Now that we've broken down what the SBSS score and what makes up the SBSS score, now let's really go into this thing. How do I generate an SBSS score? How do I build this? How do I start building my SBSS? Most guys, especially on YouTube, will tell you to climb the imaginary tier list system to build business credit. Now, will this hurt you? No. But is it the best way? Also, no. You want to focus on trade lines that banks actually care about that will help you get access to funding, not just paper towels and tissue and random things that banks don't care about. They don't care that you bought printer paper, okay? That won't make them give you big money. If you want the banks to give you big money, then you need to have products that they actually care about the history of. Okay, Quill, Uline, Granger, places like that. Generating a score is just not with them. It's not the same as having actual products that the banks care about. Okay, and what do they care about? They care about business credit cards, business lines of credit, and business loans and how well you manage them. Okay. Again, if you like to build business credit through the tier list system, fine, go at it, have fun. All I'm saying is that there's a way to get there faster and more effectively that banks actually care about. I promise you, you cannot go on any website with any bank, major, mid bank. When I say mid, meaning like uh, middle as far as impact, reach, revenue, so on and so forth, or even a smaller bank or credit union. There is no bank that you can go to. You can go to their website and they'll be like, yeah, we like to see the tier list. We like to see you on tier 5 first before we let you apply with us. Yeah, do tier 1 first before applying with us. Okay, mainly you won't even see a Paydex score as a requirement. So keep that in mind. Now, here's a simple plan to start and generate a SBSS score. First, you do want to create a DUNS number. All right, create a DUNS number. If you don't know how to do that, there are plenty of videos on YouTube breaking that down. I do show my clients how to do this, but you should know how to do that. It is free to do it online on the Dun & Bradstreet website. Step number 2, create a nav.com account Prime so you can get that business trade line. This will actually help you because they show a business credit card as a trade line when you purchase that Prime account. So this will actually help and count towards your SBSS score. Step number 3, when you apply and get approved for 1 to 3 business credit cards that report to the business credit bureaus, the major business credit bureaus like Chase, Bank of America, and US Bank, congratulations. You have now generated an SBSS and Paydex score in around 30 to 90 days. And you didn't have to wait on anyone to report and do all these different trade lines that, quite frankly, the banks don't care anything about. Okay. Now, make the payments on time and pay down your utilization to increase your score. Now, speaking of, if you already have generated that, you've already done those things, you've already built a score, generated a score, this is how you get it past 140 plus fast. Now, let's put it in these 4 categories again so we can see what we need to do within each category. Very simply put, 50% of your SBSS score, personal credit. So number 1, personal credit. What do you need to do? No secret here. All you have to do is increase your profile and your score, right? So if your utilization is higher than 30%, pay that down. Remove negative marks if you have those, and be selective with the new accounts on your credit. So only get new accounts if it's new auto loan, that you are already going to get, of course, new house, something like that. But don't get just arbitrary and random personal credit cards and random, personal credit cards, and also just any type of random accounts that you don't actually need that's reporting to your personal credit. Okay. Credit builder accounts and stuff like that. So number 2 is going to be business credit scores. You can apply and get more vendors, but I wouldn't worry about that. If you follow the plan that I gave you, you'll be fine there. Start applying for some business credit cards, business lines of credit, and business loans that will build your overall business credit score, which will help with your SBSS score. So what if you can't apply for business credit cards yet? Well, your business credit score isn't that helpful anyway then. If you're not eligible for business credit cards, that means you're probably not eligible for anything else, which you could be. You could just have a lower FICO score, but you have the revenue in order to get access to some fintech companies that will provide you with some funding. But outside of that, if you're not eligible for that, your business credit score is not going to help you if you can't apply and get approved for anything. Even if you have a perfect SBSS score and you don't have the personal credit or the revenue to do anything about it, which you actually can't get there without the score. So let me not say that. Basically what I'm saying is, say if you had a perfect Paydex score, you got 80, 90 Paydex score, but your personal credit is too low and you're not generating any revenue, it doesn't matter anyways. You can't use that score, right? You can't use your Paydex score really to get too much anything. All right. So unless your business is generating a good amount of revenue, you won't qualify for any funding to even use that score that you built from those vendors. So it won't really matter. So get eligible, right? Just work on your personal credit if needed and optimize it. All right. And if you don't know how to do that, right? And you want to work with someone that will actually go through and make sure that your personal credit is optimized so you can get access to funding. You can build your SBSS score and go to the SBA even if that's what your goal is. All you got to do is go ahead and book a call with me and my team below in the description. And either me or a team member will talk one-on-one on exactly where you are in your business and talk about the steps moving forward as far as what you need to do to get access to funding. All right. And we'll share our connections with you. And also everything else, just walk your hand up until the point where you get funded. Now, but if you don't want to listen to me, apply for vendors like Quill, Uline, and Granger and those guys. It's okay. We've had clients get 250K plus, and they didn't do either of these accounts, but hey, do you. It's all good. And look, again, like I said, it's not going to hurt you. It's not bad to do those accounts. I just think it's a better way, okay? I know it is. Your financial performance is number 3, cash flow, cash flow, cash flow. So the more cash that you're able to generate in your business, the better your overall business is doing and profitable. Obviously, this is going to contribute to that score and give you a higher score. Now, your business structure and history. So again, you're going to have to let your business mature at age, but also pick a low risk NAICS code. Doesn't always have to be consulting. And that's going to really help this category and be able to build it fast. You can change your NAICS code, so don't worry about that. You can literally change your NAICS code directly with the D&B website and also with the other bureaus too as well. You can do it through your bank and let them know that you're changing your NAICS code. You can change your business's name if needed. That's why it's best to start with a general low risk name. But you can change those things as needed, and that will actually help your SBSS score. Now, here's some of the score ranges like we mentioned earlier. So your fundability and what it means based on that score. So if you're at 140 or less, you're below the SBA minimum. Loans will likely be declined without manual review, and too many lenders would pretty much just say no. So you focus on building your personal credit and building your business credit first. If you're at 140 to 149, that's past the minimum, but lenders will definitely ask you for extra docs like tax returns and different things like that. So you can improve your personal credit and, again, build your business credit better, like pay down on your cards, your business credit cards and lines of credit that will increase your score. Now, and let me say this too, when you get your funding, use it. I'm not saying that you always have to be lower. It's just like on the personal side. Sometimes people think that when it comes to your personal credit cards, you always have to be at every second at like 1% or 4%, 10%. Before you're about to apply for funding, that's when you need to be optimized. But if your business or personal life calls for using your money, use your money. Don't not use your money and then go out of business because you're trying to like protect your personal credit score. Or you're trying to keep your utilization low. That's something that I don't see a lot of people say too. It's all about being optimal before you apply. You don't have to keep it like that if life calls for it. But anyways, if you're at 150 to 159 borderline, so again, boost before applying. 160 to 169, you're very close, very, very close. And then 170 plus, certainly most lenders will pretty much like give you access to funding without even asking for most docs, at least the kind of advanced docs where it really takes you a long time, and it will reduce the amount of docs, especially that the SBA will ask for. So that will make you a strong candidate if you're at 170 plus. And this is based on the nav.com number, because again, we don't know the exact number unless you actually start applying with the SBA, but I'm actually referring to the number that nav.com gives you once you subscribe for the Prime account. So that is the information that you need for the SBSS score, all the information that you need. And what I'm going to do is I'm going to put a guide in the description box below too as well. Give me your email and I'll go ahead and send it out to you. That kind of goes over everything that we went over here, but also you'll be able to calculate where you are and the things that you need to do to increase your business credit score so we can get access to more funding. But if you like this video, make sure you hit the like button. If you learned at least one thing and you made it all the way to the end, hit the like button. Comment below what state you're in and what is your business that you're either in the growing phase or scaling phase, or the business that you're starting. Comment below and let me know. That's pretty much it. See you guys in the next one. And I hope that this was edified till you see the next one. Peace.